Yeah.
It's not always perfect, but Vinny's going to come through, and so that's why people will reinvest their money with you, as opposed to
Exactly. Exactly.
if I went in and invested money with one operator and the first deal became a complete cluster
Yeah.
and I lost money, I
Yeah.
probably would think twice about reinvesting. I mean, but if you go up to bat 100 times,
Exactly.
once or twice, no matter how good you are, you're going to have a time when there's a problem. And let's just face it.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Beau Eckstein.
All right. All right. All right. Even after some technical difficulties, we are on. We are on, guys. Sorry, it took us a couple of minutes late here. 5 minutes late, actually. But thank you. This is Vinney Chopra right here from Danville, California, in the San Francisco Bay Area. And of course, Brother Beau right there from Henderson, Nevada, the wonderful state. Hey, lots of great activity going on in Las Vegas. And in your nook of the thing, I looked at one of the very good reports, Beau. How are you, brother? How are you doing?
Good. I'm doing well. Yeah, I think we have like the number one rent growth out of every other market. At least last year was. So I'm thinking it's the same. So tremendous amount of people moving here.
Yeah.
So that's forcing up rents, which is good for people that own real estate here.
Yes.
Like many
Yes.
markets around the country, right? Rent growth is still going higher and higher. So it's good for people that own real estate. I was just listening to a statistic the other day on one of some podcasts, and it was just going over how much appreciation. And actually, number one market for appreciation, no surprising, is like Austin. Uh,
Austin, Texas.
it was
Yes.
like 33% last year. It's crazy. But like the average house, uh, this is average across the nation, was like houses were up like $50,000 on average, right? So some markets were up
Wow.
100. So a lot of people that have owned real estate have been taking advantage of this, right? Like it's just you've got tremendous growth. Look at from when you bought your house to what it's worth now, right?
Oh
So
my gosh, I can't believe it. I mean, Danville Blackhawk, it's outlandish, man. I mean, people were paying 600,000 above purchase price, I mean, sales price, even up to 1 million. I couldn't believe it. Couldn't believe it. You're right. No, thank you. We got it here, but 2019, I think we got it, right? So in 2 years, it definitely has gone way up. And in Austin, like you were just talking about, Bo, I mean, we just bought that property, 308 units near to Domain for 34 million, 750, I think. And the brokers are telling me, Vinny, you can make 12 million right now. 12 million. This is 1 year, just in 1 year.
so I mean, I guess the thought process is why wouldn't you, right?
Yeah.
Take it when a market's this, because your strategy has always been get in, get out, get your investors' capital back with some nice profits, right? And so
Totally.
if
Totally.
you own it a year, if you own it 5 years, they're getting a much higher return if you sell today than
Exactly, the
if
IRR, the
yeah.
time value of money. You're so right about it. And I'm glad we are talking about that because IRR, the internal rate of return, is directly proportional to when you return the capital back to the investors. Not only the cash flow when you give them, like every quarter we give them, right? Cash flow. We've been giving it since we bought this property last September. We bought it, I think, 2020 in the COVID, 308 units near to the Domain there in Austin. We've been giving cash flow, right? Pref rates. So those are given back. But if we sell the property next year, that'll be only 2 years. We have owned it now. If we close it by next September, we would have returned the money back plus the 13 to 14, 15% per year, you know, returns on equity gain on that, maybe even higher actually. So it's going to be a very high IRR. Yeah. Yeah.
So it's definitely on your mind I mean, because even if your plan was 3 to 5 years, if the opportunity is there right now, why not take advantage of it? And
Exactly.
then you have your investors then have their capital back plus some, like a
Yep.
lot
Yep.
more.
Lot
And
more.
now they have opportunities to redeploy that capital.
Exactly. Yep.
So it's a win-win for everybody, and you can move on to the next emerging market, because historically you're never going to see rapid expansion like this in a short amount of time. Like this is
Surely.
kind of uncanny. So why not take advantage of that and then put the money into another emerging asset? So I think
This
that's the
is so
key.
true what you just said, because sometime appreciation of 33% or 40% doesn't come within a year. You're so right about it, and especially when you have not value added that much. I mean, of course, if you value add, do brand new renovations, interior, exterior, then the value adds, and then of course the rents go up and all that. We are able to increase the rents even with the classic units. It's a 1986 or 87 building. Not bad. But the deferred maintenance is the other factor, Bo. Like you and I were discussing, we could put more money into it and maybe the value won't go any higher. You know what I mean? But we could sell it at a respectable price. The new buyer could be then putting more money as a capex and take it to the next level. And Austin is not going to go away anywhere at all. That's the new Silicon Valley. I mean, it is. I live 45 minutes away from the, California Silicon Valley. I've seen how this whole COVID situation has got mass exodus of the, companies and the engineers, right? Yeah, yeah.
And I also think, it's just an easier process if you don't have to get into the at some point you're gonna have to do more and more value add on these 1980s, 1990s
Correct.
builds, right? So it's
Yeah,
like, hey, we bought right,
yeah,
and it's just like buying a house. Like if you just bought a house at a discount, and yes, you could go and do a full remodel, but if I could just go and relist it on the
yeah.
market
Hmm.
and make almost as much money without the effort and
Yeah,
time,
yeah,
it's
yeah.
like that's the way to do it. I mean,
Totally
like
makes sense.
it's
Totally
it
makes sense.
how
Yeah.
much time, how much headache is involved with doing a big renovation on a couple hundred units. Even though you outsource it, there's still a lot of management and you know accounts payable, paying vendors, construction lien sign offs, and all this stuff. I mean, there's a lot of parts. So it's a
Yes,
good when you have chips on the table. It's good to take them off sometimes
I love
because
it. I love it what you're saying.
you already have a win, right? So
Exactly, exactly. And Bo, again, I'm not bragging or anything. We also bought the one in Orlando. Remember, we closed it just before COVID. I think it was June of 2019, and we are listing it. I would like to declare that today because the teaser is coming out on Monday morning. Monday morning, we have talked to the brokers. We have gotten the BPO, broker's price opinion, or BOV, broker's opinion of value. Same thing. It's good to find out if your property, anybody listening to us, if thinking about, looking at, okay, what's it worth for free, you could ask the local brokers. I'm a broker in California. I don't sell or buy, I'm an investor, but commercial brokers can give you BOV or BPO, and that's what they're telling us. We paid 52 million for that one, Bo. You know about it. You might, I even might have gone with me there too. And we can get 64 million. What? I mean, the market is so hot in the Florida market, in Tampa, Orlando, all that area there. Melbourne is another place, all that. So we are not selling Melbourne. Melbourne is also worth a lot right now, but we bought it in December of 2019, just before COVID. So that one we're going to keep. But the other one, Bentley, we are going to sell. Anybody listening to us, hey, reach out to Vinney Chopra, and we got this VinneyChopra.com, my website. I know I have 3 buyers already. We have not even put it out in the market yet, but they have approached me, to get in the line, because it's a pretty nice property, 324 units. Anyway, so no, let's just talk about also the other purchase we did. I know last time we talked about we'll talk about Adelaide, right? Should we? What should I talk about? I know we did one segment where we talked about before purchasing, then we did a segment for due diligence, and now we close the deal. What would you like to ask me? And I'd love to rattle off a lot of answers for that. Yeah.
Sure. So, what was the unexpected things that popped up that might have been a hurdle to overcome? Also, what was a better outcome than you originally thought? And then take us into now that you actually took over the property, what the expectations are, how you get the team moving in the right direction. Obviously, you're
Sure.
outsourcing the property management. What's that going to look like? And then what are you? How are you looking at the KPIs to make sure the management's doing their job? And what's your expectation? Do you have a do you meet with them along with Monica on a monthly
Yes.
basis? And just
Yes.
how does
No,
this all
no,
look
weekly,
weekly?
twice a week, two times a week, guys. I'm really glad you brought it up. So definitely, let me tell everybody, those who are following us, they might know we bought 107 units in Knoxville, Tennessee. There were 15 buyers, and we put the hard money and everything day one. We got the loan closed, everything. We did the due diligence. It smelled like a rose, and it still arose, I think, because what happened is they've done interior. All the what you call interiors are all brand new, right? Roofs are brand new. Exterior, 41,000 we're going to spend on the hardy plank, by the way. That's what we're going to do on 3 buildings, Bo. So that's one thing. We just got an insurance, by the way. This is something new, I didn't know that. We got our property insurance to cover the sewer lines also. What? This is amazing. So it's almost like a home warranty, but it's a apartment warranty kind of thing, and they will cover up to 100,000 per building for the sewer lines. If you have to put brand new and so on. That was one of the things that really deterred us later on. When we were thinking about purchasing towards the closing. So essentially, we purchased the deal. The loan is amazing loan from Arbor, I think, and my very good friend Mark and Barry. And they're doing a publication, by the way, a promo or a little announcement. It's going to be come out in the social very quickly, and that they closed the loan on time for me. They did. As a matter of fact, they closed the loan in 3 days. What? With all the legal paperwork, with everything, because we were going to get an extension from the seller, but the seller denied that extension. Then they did everything in 3 days and they closed it. I just loved it, loved them, and so I'd love to, if anybody wants to, reach out to me. Of course, Bo, my friend, is also a great mortgage broker, and he gives beautiful loans. But in this case, we went with that one. Over there in Tennessee, they had done some deals, so forth like that. Anyway, but we chose RAM Partners is the name, RAM Partners. We interviewed several property management companies, Bo, and to everybody listening to us also, we've been vertically integrated. Actually, at the peak, we had 100, my company had 135 full-time team members, and we managed all our 29 assets, let's say 29 deals that I've done so far. And then I've done 4 or 5 now assisted living deals, which we are managing it, as they close and they're built. Monica and I are going to be managing those also, especially Monica. But RAM partner, the key thing is, Bo, to find the right partner as a property management company who are with the same vision and goals and everything. So they have been amazing. Gabriel, the regional manager in Tennessee, has been amazing, and her vice president, right from Atlanta, also has been. I'm trying to remember her name. Very nice people, and they did the due diligence on the asset, by the way. So property management companies can do the due diligence with you, and they had 5 people at the due diligence, and they did not charge a penny. Wow. Because we were signing with them, for property management. They also really were very upfront, and also uh, talk to talk to us about increasing of the rents, because this property we bought has a $800 differential. What? From the property about a mile away to our property, and our interiors are better than theirs, by the way. $800. So the whole thing right now, what we are going through, Bo, is to bump the rents small, 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 because we don't want mass exodus, right? Okay. So I've told them we are 99% occupied. We can go to 91%, 99 to 91, and let's increase the rents like 250, $300. The other thing is we have a value add that there is no rubs in place at all. What? No rubs at all. The seller, was a flipper, so they did not do the rubs. So we are going to be charging water, trash, gas, and the cable and the internet. Hold on, they were giving everything for free. So anyway,
So that's like a $400 delta right there between the
yeah, it
rent
is.
bump.
It is. $400 delta. And then, of course, we have, I think, $150 or something, for our, what you call it, for the rub system, right? So they have to bump up, quite a bit. And you know what? Let me kind of share with everybody, the residents knew they are getting a darn good deal. Nobody wants to give away money, right? I mean, the key thing is that the residents got a free load for many, many, months or years, let's say maybe a year, because they were renovating the deal and all that stuff, right? They wanted to keep the occupancy higher, Bo, right? So that they could, sell it to us. And not only that, the lender also looks at the occupancy, you know, T3, T6, T12. So that was the other reason also, I think, they didn't want to increase the, what you call it, the rents and so on, right?
Attention business owners. Want to grow your profits without any extra work? Focus on your expenses. Save up to 25% on your business expenses without switching vendors. Our partner platform uses data to manage and reduce expenses through benchmarking. Through our partner's proprietary $6 trillion data lake with expense data for millions of companies covering thousands of categories, we are able to continually find savings for your business. Our team then renegotiates with existing vendors and put in place meaningful, lasting cost reductions. After that, we monitor and report those savings. Our algorithms continuously identify new areas of expense optimization and performance improvement that can be activated at any time. Learn how to save money on your business expenses today. Visit expensesavvy.com.
Let me put it this way. Now we have a 500,000 that this lender gave us for capex, right? It's a bridge loan. It's interest only for 2 years, I think, or all 3 years maybe. It's only 1% penalty, if I refi it tomorrow, or if I refi in 1 year or whatever, lockout period is only 1 year, I think, so 1% only. And the good part is it's very low percentage. What's the percentage? 4%, I think, or 3.75% is my loan. So it is just all the way very, very, very good, interest only loan, IO, we call it. And the good part is that we'll be able to refi when, if we do it, like renovations and all that, which we have 500,000 to spend. And then we will be able to, increase the NOI. That's the word, right? In about a year or two. And then we could flip it, we could sell it. The value will be from 12.5, which we paid, to 17 million. That's what our projection is, with the cap rate, because the cap rate is going down. Actually, the seller broker told us if we didn't close on that Friday 2 weeks back, the seller is listing it for 2 million more right now. 2 million more.
Crazy.
And people are willing to pay 14.5 million right now. right now without doing nothing, because the deal is so good. It's a growth area of Knoxville. Number one, the city of Knoxville is putting 750 million around this location for infrastructure, for the beautiful walkways and all that stuff, Bo, and I went there, right? I saw and so forth. So that's when I made a decision, what, no matter what, we're going to buy it, and then we did buy it. And now we're going to be managing it solidly, not spending 500 on like anything that we don't need to put money in, right? I would rather keep 500 intact. If we hit any kind of sewer, which I said the insurance is going to cover it, but I want to have that backup capex, right? That's the smartest thing for any syndicator to do, is to keep that money, and only use it for the very necessary things, right? Yeah.
Yeah. So depending on a year and a half from now, you
Yeah, if the value goes to 15, 16 million,
you
I'm
can make it
telling you.
you can make a quick 3.5, $4 million.
Yeah, exactly, bud. Definitely. So that's the reason. I know I was very upset about the whole thing towards the closing, how it was going down. We were trying to get a repair credit. Let me kind of teach that too. We had gone through and we found some moisture and this and that and some flooding, in one of the warehouses or a shop, actually, workshop. So we said, okay, we might be able to get some repair credit. But then I found out actually, this was on Monday, by the way. I was in Orlando, and Monday I found out that the seller is not going to give no extension and no repair credit. And I had to make a decision right away to call my attorney to work as much as, and I gave him 45,000 legal fees, by the way. But the thing is, he was working for last 2 months. See, he was going back and forth, and his bill was 69,000, by the way. But he gave me a break. And then the same thing happened for my lending side. Their bill was big too. All right. Hey, let me teach you a lesson, guys. Everybody listening to me. Everything is negotiable in this life. Everything is negotiable. And that also went from 70,000 bill to 41.5. And I've done that before, even in Atlanta also, where my attorney dropped by 26,000. The thing is, it's all negotiable, because you want them to really gain your business and trust, and then some people will be able to do it, some may not be able to do it, but it's always good to find a win-win-win situation, right, Bo?
That's right. Yeah, there's always room, right? There's usually always room, and if they want you as a repeat customer, they're going to work with you, right? Like, hey, they're still doing pretty well,
Surely.
right? They're making a lot of money for the amount of effort they put in. So I think you got to make everything a win-win. If you know you're going to have a
Win-win.
repeat customer, if I have a repeat customer, I just give them good deals. They know it. Hey, I'll just give you a good deal. I know how much time I'm going to spend in
Yes.
it, and at the end of the day, everybody's got to grind to win, right? Like, you have to grind. The loan person's got to grind. The
Yes.
attorney's got to grind.
Yep.
And you got to everybody's got to make money, but you have to have a happy medium. Just like, hey,
You got to. Because
because
yes.
this is all about, at the end of the day, this is all about return on investment
Totally.
for your
And
investor.
time and investment. Exactly.
your
Everybody's
investor.
running a business,
Yeah.
Yeah.
If you don't get your investors solid returns, they're going to go find somebody else.
Exactly.
In theory, if you have a track record of giving people good returns, and they like your transparency, and they know, like, hey, shit happens.
Yeah.
It's not always perfect, but Vinney's going to come through. And so that's why people will, reinvest their money with you, as opposed
Exactly.
to, if I went in and invested money with one operator and the first deal became a complete cluster, and I lost money, I probably would think twice about reinvesting. I mean, but if you go up to bat 100 times,
Exactly.
once or twice, no matter how good you are, you're going to have a time when there's a problem. And let's just face it.
Oh
but
my
it's
gosh.
yeah, it's
Bo, I want to bring you up, man. I mean, let me tell everybody publicly that Bo, my brother, got me $8.5 million loan in 15 days closing from start to finish, Bo. Remember Conventus?
yeah,
And you introduced me, and I was under the bind for my Atlanta property. I put my own $2 million cash, and then I also got that bridge loan from you helped me with that, and it closed in 15 days to pay Fannie Mae back. Hold on, because Fannie Mae would not give me time of the day because it was under contract to sell to a buyer. Remember that property, 267 units? Oh my gosh, I lost sleep, but I didn't let my investors to lose their sleep at all. And actually, some of them sobbed and cried in the presentation, and they thanked me. They said, Vinny, we want to thank you that you put your money, your family's money, for us to save our interest in that property from Fannie Mae for foreclosing. Foreclosing, literally, Bo. They sent me the letter, buddy. I paid $11,000 my own money to reinstate that loan. By the way,
yeah.
so I paid their attorney. Their attorney, I paid. Yeah,
This kind of stuff happens all the time, even with very successful people. I had a call the other day,
yeah.
and this guy is very successful. His business partners are very successful. They own and operate lots of hotels,
Mm-hmm.
but they had a general contractor that basically took their money and ran.
Mm.
And their lender started foreclosing, and they're in a bind, and they have millions and millions of assets and other properties. I mean, they have like 5 or 6 at least hotels that are very profitable.
Oh my gosh.
But the point is these guys on paper are extremely solid. Things happen, right? You sometimes get bad general contractors. Sometimes you have these permit issues. Sometimes you think your loan's going to go through, and the last minute they pull it.
Yeah.
Those are the risks and stress that developers and real estate investors deal with all the time, right? And so like
True.
it's when you're a limited partner, you're just seeing like you don't know what's going on, really, how hard people are working to make things, because there's always a shuffle going
Yes.
on, like things are happening and you have to adjust, and people, that's why it's almost better to be a limited partner if you have the capital, because it's like at the end of the day, you just want to know 2 years from now, did I make a nice return, and I feel somewhat safe with this syndicator, this operator, that they're going to perform, and you're not dealing with the stress of the day to day, like where if you're the operator, you have to deal with a lot of stress, and you have to, like, you're constantly negotiating, you're constantly having problems, and people don't see that. They just think like, oh, Vinney Chopra, he's making millions of dollars, and whatever, that guy, right? But the reality of it is you're taking certain risks with your own capital. Your earnest money deposits going hard on day one.
Yes,
That's your
yes.
money. People don't see that. They just think, oh, Vinney Chopra, he's making tons of money.
I had 750,000 hard, Bo. I would lose that by Friday if I didn't close, and the seller was not going to give me extensions because we wanted to get repair credit. That's the other thing I want to tell everybody, is that you should start negotiating with the seller 10th day of the due diligence. That's my mantra. 10th day, because you got 30 days to do due diligence, but you should start showing them pictures of what you found at the property and what some of the invoices, or proposals, how much it's going to cost for the deferred maintenance that was not shown earlier. See, when you go through 100% of the units, and you go through roofs and foundation and sewer lines and cameras through it, video cameras, all that stuff, then you can bring out the worst of the property, right? And then you start negotiating the repair credit on the 10th day of the 30-day period of the due diligence, because you got 20 days to run with the seller, to negotiate, and they will also negotiate with you. But if you're left on the 28th day, and they can walk away on the 30th day, get you out of contract, or do a non-performance clause on you, then you got to be really careful, huh?
Yeah. I mean, It's a high stakes game, right? I mean,
Mhm.
there's strategy behind it. I mean, if the market wasn't as hot as it is right now, you
Yeah,
would have been able to grind him a little bit.
totally, totally.
The ball at this point was in his court because he knew he could get 2 million more for the price. So
Hold on. He would have gotten 750 of mine too. I will
yeah,
get zero back. Plus, he'll get 2 million more by relisting it, guys. Oh my gosh.
and you would have ate that $750,000
I
loss.
myself,
You
because
personally,
I'm a syndicator. I'm a
yeah.
syndicator. So I cannot charge that money to any investor at all. If investor gave me 500,000, I have to give full returns on that 500. You're right.
Yeah,
1000% correct.
yeah, yeah. So
1000%.
yeah, I don't think people really pay attention to like what really is at stake, and that if you made the wrong decision, you could easily lose that much money.
Yeah. Yeah.
And if you didn't close your loan on time, you
Yeah.
could like that guy could have snapped it, and maybe he couldn't have got the full 750 because you
Yes.
could have closed a few days later, but he could have canceled, and you would have been out half that at least, no question.
Totally. Totally.
Before we go, I just want to talk on all the stuff I've been reading about. We've got a lot of things going on. We got the Great Resignation going on, where the hourly workers and even the W-2 kind of C-level people are like they're quitting their jobs in like historic numbers right now, which is very interesting. So I think with this Great Resignation, also the anticipation of when COVID kind of finally is under control, hopefully soon.
Yeah.
Um, they're expecting this huge turnover tsunami. So we have
Mhm.
the senior tsunami or the silver tsunami. We have the turnover tsunami. We have a
Mhm.
lot of things going on. So it is going to be extremely interesting in 2022. I'm always worried like, hey, we're having so much appreciation in the
Yeah.
real estate market, but I do think we're going to probably slow down on the appreciation level, but I do think there's going to be a lot of new businesses started. I think there's going to be people are ready to spend money now. I think
Yeah.
more than ever. I think people have been saving their money because they haven't been going out like they used to. So
Yeah.
there's trillions of dollars on the sideline. So it's going to be an interesting dynamic to see all this with so many people retiring.
Yeah.
They're going to be moving. There's going to be millennials buying their houses, redoing their houses. I mean,
Mhm.
the shift is on, and it's just going to be incredible. That's why you're seeing people move to places they want to live. People are moving to the beach, the coastal parts of Florida, right? Because hey, I don't want to live in this stuffy place. Let's move to Florida, or let's move to the Carolinas. You're
Yeah.
seeing people,
Mhm.
you're seeing a lot of people being able to work remote now. So what are really taking place? Obviously, we're streaming live.
Yes.
People are using Zoom. I was in a Zoom meeting the other day, and you can have breakout sessions within the
Yes.
Zoom. So then
Mhm.
it gave me the idea. Oh, we should do a real estate event and have breakout rooms, and like
Yeah, for
why
sure.
not? Yeah, why not? This is the new norm for right now, and probably for a few years that this is people are going to get. I'm used to it now. I have a standing desk. I have a light. I have a
Mhm.
microphone. This
Mhm.
is it. This is it. So it's going to be interesting ride over the next year or two, and I'm excited for 2022, and we're 60, less than 60 days away from the new year, right?
Yes.
So I
No, the
think we're
future is bright, Bo. What you're talking about is so right. We talked about millennials, the generation XYZ, all that, so much money. I mean, crypto. Yeah, I heard some statistic 80% of the crypto owners are these millennials, and I think baby boomers and seniors will also get caught on in that. But you're right, the spending has not because of the COVID and all, and inflationary. Now that's the next thing. Biden is looking at how we could really curtail the inflation. I know the gas price has gone to $5 over here in the Bay Area. But you're right, the real estate, if you buy right, you got to buy it right, and with the strategy, how you're going to do the business plan and what's the exit. Those are the three things. If you're buying it right, you're doing the business plan, getting a good loan. Money is so cheap right now. I mean, Austin deal, I got 2.68%. Who can say no to that for leverage deal? I mean, $35 million deal, I think we put only 30% or 35% down. We got 2.68%, 30-year amortized, interest only for 4 years. Oh my gosh. And we're going to flip it, maybe flip it next year. within 2 years for 12 million gain, 10 or 12 million gain, So it's the right time. But those people who will stay the course. They won't just come out of the market, right? I always say you got to play, you got to step on the plate to play ball. You cannot just watch and say, hey, everything is over here, I don't want to buy. That's the wrong mentality, really. The thing is, there are property being bought and closed left and right. There are deals out there.
I love it. All right. Well, Vinny, we're over.
Let's
We're
go.
over.
Yeah, no, thank you so much, everybody, for joining. Please join us again. Every Friday we do it at 9:30 Pacific. So please put notifications on. We come live to you on Facebook, on Twitter, not Twitter, on LinkedIn and YouTube and all of them. Thank you so much. And thank you, Beau. See you next week, brother.
All right.
See you. Bye-bye. Bye-bye, everybody.